educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to take a look at the stock of Costco for Mr. GY. Gary, I hope this helps. Anyway, this is the weekly chart of Costco, as you can see, but that's not the important one, Gary. If we go down and look at the daily chart of Costco, you're going to be surprised here that this stock actually made its high way back in November. It had a beautiful three drive to a top pattern, and then bada bing, bada boom, we came down into March. And look what's happened today, Gary. We've just made a Gartley pattern to 61% retracement, and that's actually a bearish pattern, Gary. I think I'd rather be out of the stock or short than I would be long that stock. It made that three drive pattern up there back in November, so it's a weaker than market stock, and it should not be, because if you go to any store in the country, the Costco's are packed. I mean, they are literally packed. I mean, they don't take any prisoners over there. I mean, they got masks to wear and social distancing, but the parking lots are packed. I mean, it's a big deal. So anyway, that's what it looks like in Costco. It looks like it's been in a strong downtrend since December. The only thing that will change it, Gary, is if we get above 350 a share, then I would say yes, it's got a pretty good chance of making it to the upside. But right now, I couldn't touch it other than from the short side. So that's all I'm saying. That is a nice Gartley that we just completed here. It's right at the 618 of the previous high. That's the kind of thing that we like to see when we're looking at some of these things. Now, occasionally we get an obscure chart, and I wanted to bring this one up here, folks, because this is the kind of stuff that people send me on the internet. Sometimes it's pretty good, sometimes it's a little weird, but this is the chart of Bitcoin, and the gentleman is showing its declining volume, and it's showing this diamond pattern, which whether it may or may not be a diamond pattern, I don't know, but he's saying that it looks like Bitcoin is going to zero. Well, that's a pretty big stretch here. So maybe it'll happen, but that's way beyond my pay grade, folks. I don't do patterns like that. First of all, the number of times that they work, you can count on one hand of a triple amputee, because this thing just doesn't work that easily. It's all about risk control, and I know that looks great. That if you get it right, you're going to make a lot of money. But right now, I can't say other than the fact that you see a lot of those on the internet, and unless you have a specific pattern that you can quantify by using the ratios to put the mathematics behind it, then you've got something that you can use. But this one doesn't have anything like that. Now, maybe it'll form a head and shoulders pattern, and maybe you'll see something like this, but that's a long way out in the future, and it's a little bit too much to look at. Here's the kind of stuff that I like. Here is the chart of our Mr. Appel, who's down by the well. Let's get this up here. You'll notice here that we've had a perfect Gartley here today in Apple down there at that 121 and change level. As long as we can stay above the 121 level, this should be a good pattern, and it should be okay. But anything under 120.50 would tell me that Apple is probably not going to go anywhere. Can someone give me the last price of Apple, please, if they don't mind, so I can double check to see if it's a valid pattern? It should be holding the 121 level as the low of the day. In Apple. Anything there we go, 120, 170. The low's probably around 121. As long as we stay above that, that is a valid pattern looking at this hourly chart on Apple. And it trades extremely well off the numbers, folks. So rely on those numbers. They're very good. As our guest today, we're going to have a Mr. Shane Smolian, the Wolf Trader, is going to come on, make a spot appearance. And on Friday, of course, we are going to have none other than Norman, who calls it to the minute Winsky, will be on as our guest on Friday. I cannot believe this is Wednesday already. This is just really Just really hard to believe. Okay, a couple other questions. One is from a Forex trader over in Dubai, and his question is this. I'll bring this up here to take a look at it. He is looking at these two patterns. In one is the British pound on a 30-minute, and he sees this nice little ABCD pattern right here. And then he's also seeing the euro with an ABCD pattern there. Yes, those are the same patterns, but the question he asked me was which one should he take? And for that, we have a drum roll with the question to the answer to the question is coming, and the answer is pick one. Don't do them both. And the reason why you don't want to do them both is because what you're going to be doing then is you're going to be double exposing yourself, because both of those, say that you're going to be, short the dollar, long the pound, or long the euro and short the dollar. So you don't want to do them both. You double your risk. If you're going to double your risk, just do 2 units of the pound or 2 units of the euro, but don't do them separately, because then you're just doubling your risk. So I can't abide by what he wanted to do about doing them both, because you're just exposing yourself to extra risk. Hey, if he's got big bucks, maybe so, but it's all about risk control, not about how much you make. It's about how much you don't lose. And since we're on the subject of the euro, which we've been watching all week long, and we posted this yesterday, we'll get this up here today because this is what we were looking at. If you'll recall, we had this on the agenda for Monday, that we were probably getting ready to go down and make a double bottom in the euro. We had a beautiful ABCD there, and the double bottom, of course, going back to March the 9th on this hourly chart. And then as we update this today, I believe I updated this today, and I believe I did, and here it is. We'll get this up here, and you'll be able to see that's exactly what happened. And it's been rallying a little bit since that time, and we are still, of course, way below the 180, 118.90 level, but it started to bounce a little bit, which is a sign that this bottom is held. But anything below that 118.10 now in the euro would send this thing spiraling down quite a bit. So that's just a double bottom pattern, folks, with an ABCD pattern. Tradable, of course, but his predictability for out in the future, we don't know what's going to happen next, but nobody else does either. So that's the edge that we're using. So these are just some of the things that we're paying close attention to here today. They're rolling it over now with the Dow Jones, took over the explosive move to the upside this morning. But some of the others, Russell's still lagging a bit, but we're still in an area where the market has got to prove to itself. We've got to get above that 39.40 level and close above that 39.40 level in the S&P futures, and that would give us a chance to, with this market might be turning, back again to the upside. It's amazing. The Dow's down 300 points one day, up 300 points the next. So that's the kind of market that you have, folks. Just remember, it's a zeitgeist. It's the society's way of looking at the spirit of the ages, my folks. So we're seeing increased volatility here. And so remind ourselves that we're going to be seeing more and more of that, which helps for shorter term pattern recognition trading because it allows the risk to be small. We're going to take a little break here. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart from the gentleman in the Forex trading of the pound and also the euro. There's one other thing that is a little troubling about this chart, folks. He's looking at a very, very small pattern there, that ABCD pattern. You really don't need all the stuff on the left side of that chart. If he would have just blown it up, he would have been able to see it, much better. It's still there and you can't see it. But that's what you want to do is if you're going to trade an ABCD on a small time frame like this, that's what you have to do is to blow it up so you can see it clearly to make sure you're not missing, any key spots. So that's another thing that I would have suggested to him, which I did. So that's, because if you're doing intraday trading, there's absolutely nothing wrong with that. But remember, you're intraday trading. One of the big things that people sometimes do is they'll be in a trade, in an intraday trade, and all of a sudden it gives them a big move, a big gain, more than they thought. The next thing they're doing is they're looking at weekly and monthly charts. And that, if you're going to trade a 15-minute chart, get out on the 15-minute chart. If you're going to trade the daily, get out on the daily, because those charts are different. 15-minute chart is different than the hourly chart. No one can tell you what the chart time frame is if you just blocked off the time and the price of what it was. I mean, they're all alike. That's all they do is repeat over and over again with some regularity, and that regularity is what we look for, because that's the non-random nature of the chaotic market, as Dr. Andrew Lowe talked about in his book. So those are just a few things that we're looking at here this morning. Now, I also wanted to talk just a little bit about the natural gas, because we've been in a situation here ever since last Thursday. I want to get this up here. Those are fractals. That's exactly right, Marshall, what we're looking at. And as we look at some of these things here with the natural gas, you'll see we bottomed down there exactly at the 78% level at 241. We've been as high as this last one. We got up to 259, and then yesterday and today we back down to the 250 level. But the difference is now is the market has been down at this 250 level and has not bounced very much. All the others, the market took off, and this is telling us, maybe these three moves that we're having is going to be enough. So we'll have to wait and see. Any move below the 2.490 in the natural gas would tell us that we are getting ready to move down a little lower, probably to the area of around 244 to 245, if in fact that lines it up. That, as a matter of fact, that natural gas chart is a spot-on replica of what's happened in Treasury bonds, folks. We bottomed at 153. We hit a handle of 157 last night, 157.05. We backed off to 155. 155.30, I believe. We're trading at around 08, 156.08 right now. So the bond market has bottomed. That is a 3 drive to a bottom pattern. It's rallied now for 4 days. That should be enough. You want to be waiting for a buy signal now, because all the objectives that we looked at over the next 3 days have been working. Well, Mr. Z is saying, please comment on why the first picture of the February 11th transit chart was significant. I don't remember putting a transit chart. I don't remember what I did. I don't remember putting a transit. Oh, those are from Norm Winsky. We'll let Norm answer that, Z, because I don't know what that means. Let me see if you posted it. I guess I should see it. Yeah, I can't get it up, Z, so I'll have to ask. And we'll ask Norm when he's on Friday, because I don't use a lot of astrology. I use the lunar stuff, of course, but the other stuff is, the patterns are just too doggone accurate, folks. I mean, they give you exactly where you want to be, when you want to play, how much you got to risk. I don't know how to do it. One of the problems I have doing the radio show every day is I try to make it interesting, for heaven's sakes, because these patterns, they're everywhere. So you just find the ones that work. And like I've always said, don't take the losing trades. That's Warren Buffett's favorite rule. Don't lose money. Rule number 2 is don't violate rule number 1. So unfortunately, you have to lose, because that's like breathing. What you want to do is to keep it just as simple as possible. The euro today is a perfect example. It just laid there waiting for you to buy it, and then make a slightly lower low by a couple of pips, and then it's been rallying the rest of the day. Not a lot, but 30 pips here, 30 pips there. Pretty soon you got enough money for a nice haircut. With the number of hair I have on my head, haircuts are getting cheaper and cheaper as each time I go in. All righty, folks. Now, we have the lines are lit up. Mr. Al has told me that there are 2 lines open, so if you have any questions, please come on and we'll try to answer them. Another question about Costco someone just asked is, how much could this stock rally? If you take a look at this, folks, we were at 305. We rallied up to 345 today. 343 and change was our high. Now it's below that. 337 is the last price I had. So that could easily complete that and make a 61% retracement on the whole thing, all the way up to 360 and still be bearish. But Al's telling me there's only 1 line left, so please hurry up and get in. It's already taken, folks. Well, we'll catch you on the flip side, maybe on the show on tomorrow or Friday. You'll be able to call in and get that. Someone's asked a question to review the chart of the Treasury bonds because of the fact that, we've had that low, and I want to get that up here so that please tell me it's here. Tell me it's here. Tell me it's here. Oh, no, that's not the one. Just a second. I've got it here. It's just that this is the one I want to show. Okay, here is the Treasury bonds where we were last week. This was on Sunday. You can see here last week. This was last week's. You had the low here. Now, we rallied all the way up to 157.05. So it's made the 61% retracement of the high from the 10th of March. And so now what we're going to do is probably go backing and filling a little bit. Now, just remember, this is a 4-hour chart going back about 5 months. Just a 382 retracement of this, folks, will take this up to about 161. So that just shows you how overbought the bond market, try it again, oversold the bond market has been, because we can get a 382 retracement in this up to 161, and it could still be in a very bearish market. But I believe the bond market has topped for my lifetime, maybe not for yours, but for my lifetime, and we're going to be looking at some higher interest rates. I know you're not seeing it in your car loans and other stuff, but it's a-coming. But how much farther down the road we'll have to go, we'll have to do one thing at a time as to see what's going to happen. I don't think we're going to see negative interest rates here, but we'll see how we're moving along. See, a lot of people have been hurt by this bond move to the downside, folks. The bondholders and, of course, the TLT has taken a big hit. You'll notice on this weekly chart that we posted several times, this has been a big drop here since August. I mean, we've gone from 175 down to 134. That's a pretty big break, and these people are not day traders. They hold on, and they get an interest rate, but the problem is the interest rates are darn small. It doesn't make up for the loss. Hey, we'll be right back with the wolf trader himself, Shane Smolian.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have a cameo appearance today of Mr. Shane Smolian, the wolf trader himself. Shane, are you in the house? Uh-oh, maybe not. Maybe not. Uh-oh, we lost him. Hopefully he'll come back in just a minute, and we'll see if we can do it. There was a couple questions that I had for him. One was regarding the Fed operations, and the other one was about the astrology stuff, but we'll have him on and stuff, and we'll get him back on the line, hopefully very, very soon. All righty. Now, let's move on to we're still pretty strong in the stock market today. We weak a little bit earlier and then stronger when they opened. And of course, that opening price at first hour or so, we saw a incredible move in the Dow Jones, moving about 300 points, giving back everything that it lost yesterday plus a little, and now we're backing and filling at a higher level. So we still look very positive in the stocks, but to keep the momentum going, we really need to get the S&P above the 39.45 level, and that will give it a pretty good spot to look at it. One of the reasons, I think we have Shane on the line now. Shane, are you there?
Good afternoon, Larry. How are you today?
Hey, good afternoon. I have two questions, Shane, from one of our listeners. One is, where do you get the data when you say the Fed is buying and stuff like that? Is that proprietary, or can anybody get that?
Well, the data is published data. What happens is I take all of that into account and I process it through various formulas and come up with the Fed juice. So it's public data that anybody can get, but it's how I compile it and then how I convert that into a trading signal. That is the Fed juice.
Okay, the old secret sauce. Okay, here's the second question, and this comes from someone in Tucson, Arizona. And the question is, why do I have a hard time understanding some of the astrology stuff, Shane, even though I've been doing it for so long? I mean, I can see that I think I see the absolute holy grail, and then all of a sudden it dissipates from me. You know, I've watched it with Bayer's work on the speed of Mercury and stuff like that, and basically I come down to just my patterns, and I'm really good at that. But how do you handle it? Because, I mean, you know, you think you're really close at times, and I believe that's where the answer to the markets lies, is in the astrology. But, boy, it's got so many components that it's just tough.
Well, I think to answer your question, I think this astrology works very well when the Fed is not so heavily involved in the markets. But when they are involved, you definitely get a distinctive bullish bias to the upside. So one of the things that I've done to counter that is I've created these newly optimized astro systems. In other words, they're being optimized now. I have this new double lunar cycle that I'm using that optimizes the markets every 30 days now. This is a whole new trading system that just came out, and it's going to be for every single market. So I've taken, for example, I'll take a lunar cycle, and then it's going to optimize it twice to take into account what the Fed is doing. So that's a good question. It kind of leads into what I'm doing right now on these markets. So I'll get into that, but as we go through this presentation here. But I'll start with the S&P here. So what you're seeing, Larry, is I know that for years and years the Bradley worked well, and it calls these markets to the bottom. But now we do have the reality of the Fed. We do have the reality of all of the stimulus. So you definitely have a more bullish bias on these markets. The astrology is still there. It's just you have to take it in the context of the uptrend and what the Fed is doing.
Well, that explains it, because for years the Bradley model was, it had so many. It still has a few good dates here and there, but they only last for 2 days sometimes, and then the market keeps going higher. But we've frankly never seen the Fed do anything like this, so we'll have to wait and see what happens. But thanks for answering the question. That's what people ask me, and I say, I don't know what the answer to it is, but that sounds like a logical one. So continue, please.
Yes, and so we need to optimize these astro models now every 30 days using walk-forward technology. In other words, it has to be – you can't just look at the past. You have to use the technology that will allow you to look into the future. So in the past, you were able just to look at the past and say, well, that's going to continue. That's not the case anymore. So that's kind of where I come in here with the service, and we have these new models. Okay, S&P 500. Let's talk about that. I think everybody likes to talk about the S&P. The Fed Juice 4.0, which we developed, the Skynet is modeling the S&P very well. The Fed is still ramping up the juice. So that's something that's still going on, and they're continuing to do it. So, that with the stimulus, I expect this market to continue higher. The seasonal patterns. Okay, so we're in a pattern right now where the seasonals are bottoming, and the market is likely just in a well right now, as is oil. But probably these seasonals are bottoming, and it's going to be trying to make the next leg up. And then the new doubly optimized lunar cycle This is a standalone trading system using lunar cycles. What I talked about using walk-forward technology. This is not just looking at the past and saying the past is going to equal the future. This is actually using technology to take the Astro to the next level. And so that's something that I'm always trying to do here. This is going to be in all the April newsletters for every single market. So I'm going to take a quick look here at the S&P just to give people an idea of what I'm saying here with the actual the Fed. So the Fed started with this, what I call the Skynet, and I think Joe DiNapoli called it this too. But this is where they changed everything in late October. Now, if you go forward to where we are right now, you can see this incredible surge that the Fed has had, and the market's very sensitive to what the Fed is doing. Even this recent little hook back here we saw in the Fed, the market did have a little bit of a pullback. But I believe that for the long term, this market is going to be trying to push up to the upside, and I think we're going to have a distinctive bullish bias on this market. So that's just something that we're looking at. It's the reality. On the weekly time frame, the Fed is still very strong. I don't see any signs of this weakening. People speculate that the Fed is going to implode and all this stuff. I don't see it yet. It is possible at some point, and I would definitely be the first one to tell you. But right now, things look pretty bullish on the S&P, in my opinion. I showed this chart before of this exponential rise on the S&P, and people got pretty excited about it. I'm really just showing you what is happening right now in this S&P. These trend lines are continuing to change on a weekly basis. They're continuing to get steeper and steeper. So I don't think anything crazy has to happen. This is already happening. This is just a continuation of what is happening. If it really goes up on an exponential rise, the S&P could get up around this 9,000 level by 2023. But really, it could fall anywhere between, I think, this 5,000, this 9,000 level, if it continues on this bullish pattern. So I'm just putting it out there just to let people know that this is what is happening. This is the current behavior of the market, and this bull is continuing to get steeper and steeper. Now, I talked about the Fed Use 4.0, and I'm going to show you the last 7 trading signals of the S&P 4.0. This is in the S&P newsletter, by the way. These are the green arrows on the chart. It's been modeling this S&P beautifully. The last 7 signals, this is the Skynet that I talked about. These are the actual signals that I posted here, and the black line's the S&P.
We're going to take a break, and we're going to be back. If you could cover gold and silver, if you could, Shane.
Sure.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back, folks, with Shane Smolian, the Wolf Trader. Shane, I posted a chart of platinum in there. We're in the midst of a little bit of a correction here. What do you see in the gold and silver?
Okay, let's get to the gold and silver here. I'll come back to our S&P. Gold right now. Okay, let's talk about gold. Okay. This is a perfect chart to show you what I'm talking about with the new optimized, the double optimized lunar cycle. So actually on the charts here, you can see this is gold here. This is the daily chart of gold I'm showing. Now this black line here, this is the actual solar cycle of gold. I'm going to highlight it here so you can see it. So the solar cycle was falling here. The solar cycle makes a low here in mid-March. And now the solar cycle is starting to do a little bit of a rise here. So the problem is that gold is, on balance, very negative compared to this solar cycle. So, for example, once it hits this top here in the solar cycle in mid-February, you can see it starts to accelerate to the downside. And I think what we're seeing right now is some type of a sideways action. And I was talking about this. I think this is likely going to continue out until early April. Now, down here, this is where I have the new double optimized lunar. So this is the double lunar. And so what we can do with this now, you can see this. This is in the metals newsletter, by the way. So the double lunar makes this buy signal on the 17th, and it's going to stay into a buy until about April the 1st. Now, I'm going to re-optimize these at the beginning of April, but from what I can see, and I traced this out on another chart, it says probably making some type of a complex sideways consolidation, sideways correction, until some point into April, and then it's likely going to head back down into May. That's my best feeling about this. I show more detail on the actual newsletter. We project this out, but if you go with the solar cycle and then this double optimized lunar, it's telling us that we're probably in some type of a, just like I said, a consolidation period here.
Wow. Do you have a chart of platinum, by the way?
I don't, but
okay.
I do have the double optimized lunar for that, and it is optimizing very well. Shoot, I just did this morning. Let me see when this double optimized lunar is out. I'm looking at it. Probably double optimized lunar is going to be a same type of similar situation of gold right now. But I'll get that chart up next time if they want to talk about the platinum. Platinum is a different market because it rolls a lot smoother than gold does. Okay. Gold can be a little choppy on the intraday. So,
okay, fair enough. Okay, if you don't have it, not a problem. Go on back to the S&P then, if you would, please.
Sure. S&P. So we were talking about the S&P, that the Fed Use 4.0 now is really giving us some very clean signals on this market because I've changed how I'm measuring how the Fed is assessing this market. These are the last 7 signals. They almost pick these turns almost to the day. They have been the last 6 days. Now, it doesn't always stay this good, but it's just to illustrate that things are cleaning up here with the Fed Use 4.0 signals. And it's a challenge, Larry, because you have to keep up with what the Fed is doing. They're changing what they're doing. And so this is the challenge of it. And when we get into the astrology of it too, it's the challenge. Now, this is a general forecast of the S&P, and I want to talk about we're in this well right now. So this black line is the planetary speed index, and the green one is the solar cycle. So we were in this astro well into here, the same. So you have the planetary speed was in a well, I call it like a low pattern here. The solar cycle was in a low here. The cat master was in a low here. Cat master is an astro signal. I'm going to be replacing that with the lunar cycle. But you came into this trough into here. So the Fed was able to really overpower these markets into falling astro patterns. So generally when this happens, once the astro starts to turn more bullish again, which it is now, starting to put more bullish, usually when the Fed is in there working with these markets, then you start to get the next leg up in the S&P. So I expect the S&P to be heading higher. And again, I'm able to give much more specific astro turning points with the double lunar cycle. So that's what's important with that. Some people like to talk about Bitcoin too. So Bitcoin kind of runs with gold, but let me just show you where we are with Bitcoin. Again, I have these new double optimized cycles. This one is a cat master, but the solar cycle for Bitcoin was falling and falling and falling. It actually makes a low now, and Bitcoin's actually going to start rising again in terms of the solar cycle. So it's likely that Bitcoin is going to try to make the next leg up here. I give the exact highs of these solar cycles and the lunar cycles in the newsletter, but this is in the crypto newsletter. So we're at some type of a short-term high right now on this cat master, and then it dips back down. But then they both start to rise into April. So I think April could be a bullish month for crypto. It looks like it's probably trying to make the next leg higher. But you know, it's similar to gold, but it's different than gold because gold is showing a weaker pattern than Bitcoin. And so it seems like that when Bitcoin starts to make its runs, that gold is suffering. So for whatever reason, these two markets are, it seems like the money's leaving, kind of like the markets used to go between the bonds and the S&P. Now it's kind of like gold and Bitcoin, that type of a thing.
Do you have an opinion on whether you think the Bitcoin phenomenon is real or not?
I do. I think it's real just from the simple fact that they listed it on the CME. I mean, think about that, Larry. I mean, they listed it. I mean, it's
3 years ago. Yeah.
Yeah. I mean, that's the real thing. I think they're watching these technologies, and I think eventually the government's going to get into it. But yeah, it's real. If they listed it, it's real, and they have an interest in it. And then I have another chart here, which is the 10-year bond. You've noted on your show that the 10-year bond is in a bottoming process, but I want to show this from the astro perspective too, because you started out the show talking about that too. So we have a breakaway here on this 10-year. It hit a low here just a few days ago, but you can see the solar cycle up here is also bottoming and starting to head higher, which is interesting. And then this lunar cycle here, the double optimized lunar, you can see this makes the low right here, and right when the bond market's making the low into here. So this is pushing up, banging up on the roof for a little bit here. So it looks to me like the bond is trying to make some type of a low into here. And so how far that goes, remains to be seen. I know some people on your show feel that the bonds are going to make a new high, and you feel that it's not. But I'm focused right now in the near term, and it does look like this is trying to make some type of a low here. And the Astro is modeling this nicely. The lunar cycle here, the double lunar cycle here picks this up. And I think the solar cycle really shows you the power of looking at these cyclicals, especially when you put them on the chart and you can see the price action moving with these Astro events. And then when you have the specific turning dates, like this one goes, this specific lunar goes sell 323, buy 329. But the main idea is that I think we are trying to come off these lows.
Wow. Well, you certainly have a scientific background to go into some of this stuff, so I certainly appreciate your opinion on that. I'll tell you, it's so far over my pay grade. I have people ask me all the time, about it, and I really have to say I don't know much about it, which is the understatement of the year. But it can't be a bubble because it's been going on for too long, and bubbles don't last that long. I mean, they usually go straight up and straight down, and this one went from 20,000 back to 3,000 and then to 62,000. That's not a bubble. That's a bull market.
Yeah, absolutely. Yeah. And especially when you see those trend lines continue to get steeper and steeper, that's a very steep bull.
Hey, listen, thanks for being on today, buddy, and we'll have you on again in a few weeks, okay?
Thanks, Larry.
You bet. Shane Smolian, folks, thewolftrader.com. We'll be right back. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Okay, we're back, folks. And hold on, we still have Shane on the line. Shane, you want to tell the folks how they can kick the tires and see a few of your newsletters?
Sure. You can go to www.wolftraderfutures.com. And you can also go to fedjuice.com. We have that domain too. And you can check us out there. We have multiple newsletters, multiple services on S&P metals, energy, currencies, crypto. And all of these newsletters are constantly being upgraded and refined. And so we have this new double lunar cycle for all of the markets now. It's going to be for 22 different markets. And you can also reach us on Twitter, WolfTrader FUTU1. And also we have a YouTube channel, so you can come check us out at Wolf Trader Futures. And I'm going to be posting some webinars. Usually they're pretty lengthy about how the services work. Or you can just go to the website at wolftraderfutures.com and chat me. There's a chat messenger box down there, and I usually get back to those within the day.
Well, that's good. One of the questions we have is, are you ever going to have a webinar where you maybe do a 1-hour teaching gig or something?
Yeah, I've been trying to do that. I used to do it once a week. I'm trying to get back to that schedule. But if you sign up on the website to the free email and you go to the Twitter, I'm going to announce that I'll probably do one this week or this weekend, and I'll go through this presentation that I have here, just to give you an idea of what we do and how these services might be able to help you out with your forecasting of the markets and trading.
Oh, that's great. Well, listen, thanks for being on the show. We'll have you on again, and I won't cut you off so shortly. I forgot that you were coming back for a little bit of a commercial, which we really appreciate how the folks can reach you. So thanks again for joining us, and we'll have you on in a couple weeks. Anything astrologically really big that looms on the horizon since we just passed the equinox?
Well, the equinox is always an important point to look at. I will just point this out. We're coming up on the anniversary of the market lows. We just passed it a year ago, and I want everybody to think about how far we've come since that point. And I just think it's phenomenal that we have recovered. So,
yes, sir. Thank you. Shane Smolian, wolftrader.com, folks. We'll see you on the flip side tomorrow. May God bless. Live every day in an attitude of gratitude.